Hello, Vithal sir. How are you?
I'm fine, sir. How are you?
I'm good. I'm good. Shall we get started?
Yeah, please, sir.
So, hope you can see my screen.
Yeah, I'm able to see your screen, sir. It is sector matrix.
Okay, so let's start with the Nifty chart. As of yesterday, this looks like some kind of a correction that we saw last week, and we still have this open upside counts of 19,246 and all that. But the setup has turned neutral because we have a high pole pattern and the trend is still bullish. So this is Nifty. And if you look at Bank Nifty, this is what is sort of worrying because though we had a breakout to new highs and then there was a follow through buy signal, there is absolute lack of momentum. So you had this breakout column, and after that, if you see, there was almost like three-fourths the size of the previous column of X, the retracement. The same thing we are seeing here again, which basically is telling us that though price has given a breakout into new a fresh high territory, there is no follow-up momentum. And Bank Nifty is one of the influential sectors in Nifty. And if that is struggling to hold at all-time highs, that is some kind of a cause of concern. And if you look at the sector matrix, most of the sectors are still overbought. If you look at it, this is a short-term 1% breadth indicator that we are talking about. PSU Bank is overbought, energy is overbought, public sector is overbought, but these overbought sectors are not, they do not have a big influence on Nifty. But if you go to a slightly bigger box size or time frame, and if you look at the sector breadth, you will notice that almost every other sector which has a big influence, like Nifty IT, FMCG, banks, most of them are overbought breadth-wise. So that is what is sort of concerning me for several weeks, and which is why I am slightly um, thinking towards maybe some kind of a range-bound, cool-off kind of a price action that can happen in Nifty.
Okay.
So let this be complete. If we sort this on descending order, you will see that FMCG is at 100%, IT is at 100%, and if you look at where banks are, private banks is at 80%. So these three, four sectors, they account for big weightage in Nifty 50. And if these sectors are overbought in the bigger time frame, then the scope for any significant rally is that much. Uh, what shall I say? It's going to be a challenge, right? So let us look at some other factors. For example, this is the Nifty breadth indicator that we are talking about. This is a Nifty 50 candlestick chart, and plotted below is the P of X percentage. So there is clearly a negative divergence that you can see. So price made a fresh high here, but if you notice, there was a divergence in the breadth indicator, negative divergence. So the breadth did not was not making a new high, and after that we started cooling off. So this is not a particularly healthy sign where you see a negative divergence between price action and the breadth indicator.
Okay.
And if you look at the breadth indicator in the slightly bigger box size, so in the previous chart, we looked at 1% short-term breadth indicator. Now let us look at the breadth indicator in the slightly bigger box size. So here and again, if you notice, we are at overbought levels. So the breadth currently is at 88%. So this again is not supportive of further rally in the Nifty in the short term. And if you look at this is another breadth indicator that I'm looking at. So here, what we are doing is we are looking at the percentage of stocks from the Nifty 50 basket which are trading above their 50-day moving average. So 50 days is neither too short nor too long. It is kind of a medium term kind of a thing, right? Short to medium term. So here again, if you notice, we the breadth indicator is overbought at 82%. And clearly there is again a divergence between price action and the breadth indicator. And if you look at longer term breadth, so here I am talking about a percentage of stocks that are trading above their 200-day moving average. So we are at fairly elevated levels here also as far as Nifty 50 is concerned. So the breadth indicator is at close to 92 odd percent. It has cooled off from 94 percentage. So this is overbought. And if you look at the IT index, which has been doing really well. Okay, before we get to IT, let us look at the Nifty 50 Renko chart. Here again, there are interesting observations that I wanted to talk about. So here, if you notice, um, this is the disparity index that I have plotted, and this calculates the difference between the 40-day EMA and the current price. So the disparity index is we are really overbought if you look at the disparity index, meaning the price is uh, some significant distance away from the moving average. So some kind of a mean reversion can happen. So this mean reversion can either happen in the form of time consolidation or a price consolidation. So if it turns out to be a time consolidation similar to what we saw between February and July, that is the ideal scenario that we can hope for, wherein Nifty could cool off and there could be sector rotation and the broader markets can still do better. I'm not too sure if that scenario will play out or whether the price is going to correct significantly so that it catches up with the moving average. Which scenario is going to play out, we'll have to wait and watch. This is, of course, in 1% boxes. If you look at even bigger time frame, 3% brick size, here again, things are elevated, meaning the price is uh, overbought and the distance between the moving average and the price is at a level where historically price has tended to turn around and get into some kind of a corrective mode. So you can look at the historical price action and you will realize that price has this tendency to get back into a corrective mode on earlier occasions. So roughly, if I place my cursor, you will notice that we are at fair distance away from the moving average. I don't know why. Um, okay, so the point that I'm trying to make here is whether you look at the price action or the breadth indicator or sector level study, everything is conveying the same message that maybe we are headed for some kind of a cool off phase. Whether it will happen or not, we'll wait and see. So let us have that at the back of the mind and take decisions accordingly. And this, of course, is the Nifty IT index. So this index has been underperforming the Nifty recently. And again, if you notice, price has seen a very strong run up and it has rallied a fair distance away from the moving average. So it is just pulling back. And this, of course, is in 1% brick size. And if you look at it from a slightly bigger time frame, here again, you will notice that the disparity index is at elevated levels from where it has historically gotten into a corrective phase. So, if you look at it sector wise or price wise or breadth wise, I get a feeling that we need to be slightly cautious regarding taking aggressive long positions, maybe tighten up our stop loss or the risk parameters and be slightly cautious. So we will take it forward based on how price action unfolds in the forthcoming days and weeks. So that's it from my side. Maybe you can just take over and talk about some interesting stuff.
So it was really very interesting to see, sir, that all the sectors are regarding the price action and the breadth, how we should be prepared for the coming days. I'll just share my screen, sir. Just give me a minute.
Do you have anything to add or any other view? Is there any other aspect that you think is pertinent to be
Yeah,
shared
no, I
from a
get it,
market
sir,
perspective?
because as you had also in your past webinars also, when the market last year during August or September, it was overbought on all the higher box values as well as on the 1% what we see regularly. So at that time, the same type of sideways cooling had happened, and then we had the next rally. So
Right.
a similar kind of thing where we are seeing sectors and most of the broader markets indices are now showing disparity wise or breadth wise. Both is the same indication where we are looking for some overbought kind of signal.
Yeah.
So I don't say that it will be correction or it will be bearish, but definitely, as it has happened earlier, some cooling definitely can be a possibility. So we are always dealing with possibilities, and one should keep in mind when those possibilities are more probable. So right now, looking at the disparity as well as the breadth, the probability definitely is a bit more, but we will be prepared for both the sides. So I
Yeah.
have something to share where if the trend resumes and if we still have some bullish price action in Nifty, how we can deal, or if there is any minor corrections that are happening, where to look for opportunities to trade. I have both the sides prepared, and I will
Okay.
just share something.
Yeah.
So I'll just share my screen, sir.
Sure.
So I hope you are able to see my trade point screen, which is blank.
Yeah. 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 It's visible. Yes.
So before I start, I just want to see that what are all the sectors doing on a quarterly time frame. So if I
Okay.
go to Nifty 50 chart, as we have a monthly closing that has happened, which was also a quarterly closing. So on a
Right.
quarterly basis, I'll just remove all the moving averages. So on the quarterly basis, I see Nifty has also currently succeeded again this quarter to close above the previous quarterly high. So April,
Right.
May, June. So that candle, what we see, we have the current quarterly candle, which is the September ending candle, which is also closed above that. So mostly we see in auto also we see the pullback that has happened. There was a correction during the July, August month, but in September we see recovery. So that is why we see the shadow in the downside. The strong shadow is indicating that we are having some recovery in auto, and all the rest sectors we see bank, commodities, consumption. So every sector has closed above the previous quarterly high, which is an
Right.
indication that the rally is overall rally. That means all the sectors are participating here.
Right.
So the sectorial participation I see it is not due to one or two sectors. It is based on also even the laggards like media. Those are also now showing some strength. So
Yeah.
the participation is also from the outperformers as well as from the laggards. So still if we have some bullishness. So what I am doing is I am just prepared. I have made a group here which is a group of all the stocks that have closed above the previous quarterly high.
Okay.
So these are all the stocks which have closed above the previous quarterly high. So I can see if closing basis they are bullish, and if they are in a pullback zone. So maybe I can go and use a scanner on point and figure, and I can look for not double top buy. So these are the stocks which I know that on closing basis they have done bullish close, and it is also closing above previous quarterly high, and they must have small pullbacks that have happened during the closing time. So if we resume the bullishness again, or the indices are still, even the markets are overbought, still we get breakouts. So where to look for probable trades, if I'm doing any trades based on 1%, or
So
maybe
you're running
buying.
the scanner on stocks that have closed above the previous quarterly high. That is
Yes,
the universal.
I was I have prepared this group
Okay.
yesterday when we had the closing on 30th. If you
Okay.
run today, you will not get, because now the current candle is taking it as a quarterly candle.
Right. Right. Right.
So if you want to do it, then you can keep that quarterly price as at candle one, not at zero.
Right. Right.
So I downloaded this on 30th September evening after downloading the UD data, and from
Okay.
there I have got some interesting stocks. So again, if you see some of the names, if we want to even trade in a smaller box value. So if I
Right.
go to some of the names on the same concept. So LCAM is one of the stock which is giving us a follow through breakout right now. So we have some small risk patterns here, which is a follow through double top buy, and which is also a continuation of the earlier bullish double top buy. So where LKM, then we have Ashok Leyland. So these are the stocks I would be keeping an eye
Actually,
on. Where I,
can you go back to Alchem for a minute?
yeah, sir.
What I wanted to just point out was you also have a turtle breakout and follow through. So
Correct,
just at
correct.
the confluence of because we have been talking about this, right? People always have this doubt about which is the best pattern, which is the best strategy. So the
Yeah.
point is, irrespective of whatever you do, you will always get the opportunity, whatever pattern
Yes,
you follow.
correct. So if I add a turtle bullish, it will already be turtle breakout bullish. So it is already active, and now we are getting a follow through
Now, if
buy.
you get a buy signal, it is a buy signal as per your strategy that you are explaining now, and it's also a turtle breakout follow through.
Correct. So even one more stock, DLF, Canfin Home. So Canfin Home is one more stock where I can have a small pullback. Now this is a 0.25% chart. So nine
Right,
boxes are like eight boxes is 2% risk. So
right,
around 2.5% risk. One can look for. So these are the names. DLF. One can look for affordability as well as, so you have major anchor column. So this is also turtle follow through where
correct.
we also have counts open, so we can look for the projection at least. We have observed that the first count also has high probability, so sooner or later we have this. So IRCTC is one more name. So I can see we can get a triple top buy with a small risk here, because this is a
Right.
probable triple top buy, and I
Yeah.
also have counts. So based on the price performance, so I am just comparing price which are outperforming during a period, that is 1st of July to 30th of September. So this is a
Right.
kind of relative strength concept, but here I am just picking up the stocks which are closed in a rally or in a trend. Simultaneously, even if I want to pick something, I can go to table. I can use this performance table. So if I come on performance table, let us just talk about Nifty 500 as well as F&O stocks. So if I come here from 1st of July till 31st of, sorry, 30th
30th September.
30th September. So if
Yeah.
I scan this, so what indication does this give me? Suppose we have a correction, where to see for shorting opportunities, and suppose we resume the uptrend still from Monday without having any correction or sideways price action, where to look for bullish patterns. So this will
Right.
give us, help us on either side. So in the last quarter, I am just looking at the price performance. So this is for Nifty 500. So I will be looking only for bullish opportunities. So if I sort this, this is giving me the negative ones on the upside. And if I again re-click this, so
Right.
I'm just concerned about the last column for period. This last column
Right.
is giving me all the performance result between the two dates. That means
Right.
1st of July till 30th of September. So these are the stocks that have performed during last quarter. So I can
Okay.
also go and create a group where the score value is above 25. That means stocks that have uh, gone up compared to the compared to the opening of 1st of July and compared to the closing of 30th September, stocks which have uh, means given us a gain of 25% or more, we can
Right.
create a group. So I can just
Okay.
create a group stocks. Oh, sorry, stocks with greater than 25% increase in price. So I can create this group, and if I close, okay, I think something has gone wrong, but I'll still score value 25, which is above, and I'll save to group. Let me again save the group.
Maybe just try going to a different group and come back to NSE.
Yeah, maybe stock prices which have increased greater than 25%. So I'll just create a name, because this name is anything that we want to give. So
Right, right.
as you said, I'll just go to some other group and come to NSE. Maybe I'm using that percentage sign, so that is why it is not happening. But let me do it again. So performance table, and I'm taking Nifty 500 as the universe. 1st of July, 30th of September.
Yeah.
I'll scan this, and then I'll again rerun it on F&O to see for the shorting opportunities if we have any correction in the coming days.
Right. So basically, this is just a different kind of relative strength study that you're doing. So you're
Sir,
looking at
yeah,
the
so
top
I'm just
gainers.
taking, correct, sir. I'm just taking 500 stocks where the toppers I'm selecting. So maybe
Right.
25, 30, 50, whatever one wishes to see. So here
Hmm.
it is 25% score value, means it will take for the period. Sorry, for period I had to select. That is the problem. That is why it was not giving me.
Okay.
So
Oh,
here I
right.
am selecting for period because I want to
Right.
take this as a result.
Right.
So I will go to save group and stocks with more than 25% gain in price. So this is the group I am getting. So if I successfully saved, so if I come here, I have that group. So
Right.
I have all the stocks which have given a gain in price more than 20%, 25% from 1st of July on closing
Okay.
basis. So I
Okay.
can go even in the scanner on EOD scanner. I can run any pattern, or if I am using a double top buy as a pattern that I will enter into a long trade. So I will see all the stocks which are not in a double top buy right now, so that
Right.
I will have
Okay.
some opportunity to enter into the trade. So these are the stocks which have a possibility of double top buy. So if we see, now, if I sort on the DBS level, so I
Hmm.
see 1.54% is the DBS level. If I add with the DTV, I also get the idea that I will have a 5-6% risk here, because
Right.
4% price is still away from double top buy, and
Correct.
after the double top triggers, my risk will become 4.52 plus 1.54. That is somewhere
Yeah.
6%. So I
Hmm. Hmm.
can
Hmm.
take this into Excel sheet, and I can look for all the stocks which are having a lesser risk entry as per
Ah.
my risk appetite, and I can open and check all the patterns if I am able to trade. So I will apply all my other analysis. So this is a kind of trend line breakout from the previous swing top. So this can
Correct.
be a candidate where I can look for a buy signal.
Yeah.
So
ABC also.
yeah, ABC also, and the rest of the analysis remains the same. But I am just looking. So this is a kind of anchor follow through. But maybe the risk is bigger here. So I may look for a follow through pattern. So
Hmm.
if the
Hmm.
risk is acceptable, now anybody who wants to also look for some investing opportunities, the similar can be applied. Now we also have stocks which are in a probable double top buy on 3%. So maybe where the risk is affordable, a stock like Rain, which we see in the rally. So we also can look whether we have a opportunity in 1%, 3%. So here it is also kind of ABC breakout. and a trend line breakout. So I get an idea where to see for buying opportunities if the trend resumes. Vice versa, coming back again to the same scanner, the performance table,
Okay.
I can also just select F&O and look for the weaker ones. So
Right.
which have closed negative, so which has closed below zero. Those will be on my list for shorting opportunities if we have any correction.
Right.
So I am just taking the F&O group as we can short sell F&O stocks in F&O. So I will be only concentrating on this group. So here I can take the for the period I can take value below zero. So all the negative return stocks. So you can see there are a lot of stocks which have also closed on quarterly basis in red. So this
Hmm.
can give a group of the weak stocks. So I can go and save this to a group. So I can say weak stocks. Now maybe I can now I won't do a short sell in a higher box value. So the best box value that one can use for shorting F&O contracts according to me is 0.25%. So on 0.25% I will daily run this and look for not double bottom sell. So not
Okay.
double bottom give me a, list of stocks which have just pulled back and where the possibility of a correction resumes. So I can look
Hmm.
for any stock and now here I can see there is a strong anchor column. Whatever the reason is for the correction, if that correction keeps on resuming and we have any short selling happening, so I can look for selling signals in the weaker stocks.
Hmm.
So maybe some stocks are in already in double bottom sell. So these stocks will have some pullback and I will get the opportunity later on. So I can also see there are stocks which are also in a double bottom sell. I can wait for a pullback which are really weak and we can look for shorting opportunities. So we can be prepared on either side. Whatever happens, we'll just react to the price and do the respective trades. So this is it from
Wow.
my side, sir. If you have
That's
any questions.
interesting. Yeah. So, in a way, you are factoring in outperformance, underperformance, and looking for low risk opportunities from that universe. And you are
Yes, sir.
basically prepared on either direction. You have a list of long candidates and short candidates, and you are ready to act based on the market environment.
Yes, sir. So that's the
That's
best policy because our bias will always be against our actually our bias is never beneficial to us. So
that is
better
true.
we do something what is coming as it is.
Yeah, that's perfect. That's interesting. So I just hope that the viewers will take this forward and come up with value addition and even probably better or more interesting ideas. Yep. Thanks a lot,
Thank
Vithal, for your time.
thank you, sir.
Yeah.